Okay, talking about interest rates. And this one's going to be a long one. It's going to be detailed. I'm going to say some bad words. But Federal Reserve yesterday cut interest rates. Everyone's first thought is, all right, well, now the mortgage rates are going to go down. But this is what they're doing, and we're going to get conspiracy theory here. But by cutting the interest rates, he's lowering the bank's cost of lending. We're also lower on your credit card payments and car loans, things like that. They don't just turn the clock today. You're not going to see that for a little while. But it does lower the cost, the initial bank's cost to lend. But what Mr. Powell, dipshit as I like to call him, then did was he makes comments about Trump and how inflation's going to come back because Trump's back in office. Now remember, these are the geniuses that couldn't predict inflation the first time around, and they kept saying, oh, it's transitory, don't worry, it's going to go away, it's going to go away. That's them. But all of a sudden now, Trump's saying, oh, inflation's coming back next year, so we're not going to cut. We're going to cut less than we thought. What they just did was send the 10-year Treasury up, and that's what mortgage rates are based on. So now you got the 10-year Treasury going up significantly. I mean, chart does not look good. I did a market update yesterday. What that does is increase your cost to borrow. So the banks get money cheaper. You pay more to borrow. So what they're doing is they're creating this spread between the two, their cost and your cost. And what I think they're trying to do is get the market up to, because the way we're going, we could be on track for 7.5%, 8% again. And the reason they want to do that is because they're almost a full percentage point down from when they first started cutting. So they started cutting, and now they're 1 percentage point cheaper for them to send you to borrow money. But your cost went up a percentage point. They took a 2-point spread at least on that. Times it by hundreds of thousands of dollars, millions of dollars. That's how they make their money. And what I think they're doing is building in, because this is just comments, right? You can't be held liable for what you think is going to happen. But I know what they think happens almost never happens because they're idiots. So making the comments, not based on any data, gives them an out when maybe it doesn't materialize, because everyone who lives like in the United States knows we're not going towards inflation. We're going towards people pulling back, spending's being cut. People have had enough of fees, overages, things like that. So what they're trying to do is make more money on that spread. People, they figure, hey, listen, you're buying a house at 6, they're buying a house at 7, they're buying a house at 8. Let's push it one more time, see what we can get. The market's still strong. So they're building in their refis as well, because if you have a 7% rate, it's going to be easier when we get back to just where we are today at 6% where we were a week ago, 5, 8, 7, 5, 6%. Those are going to be refis. So not only did they catch a 2-point spread on you up top, but when they come back down, they're probably going to be lowering the cost again. So they're going to widen their spread over time. They're creating a refi boom for down the road. They're screwing over whoever's in the process right now, and they could easily roll back those comments later on because it's not based on anything but their expectations. So that's why what they actually do with the interest rates is less important than what they say about what's to come. So this is kind of like an overview of how this is going down. We use the charts. We try to kind of gauge where we can be, but if I could predict all this, we'd all be a lot better off. But this is where we're at, just so you can see this is why a lot of these systems need to get eliminated, like the Fed in general. He is controlling everything and basically working for the banks. So bad news for everybody who's in a loan process now, because we probably have a few more months of up now. Anyone who's locked, we locked at some low ones, but if we had time, we were trending down until just recently. So I'll keep you updated as we go, but just overview of how you get screwed for Christmas. There you go. Actually, we call Fed, he'll be the Grinch. That dumb shit. He's going to be the Grinch. Jerome Powell is the Grinch. I don't even know how to spell it because it's not worth it. Have a good one, guys.